Hi guys, welcome back. Today we're going to be looking at AFFIRM Holdings. AFFIRM Holdings is a buy now, pay later company, which has sparked a lot of interest in the market. It's gone from about $70 to $140 over the past month and a half. And it has stoked a lot of interest from investors because of their deals with Apple, deals with Amazon, Walmart, and other very, very big companies. So today we're going to be looking at their investor relations page. We're going to be looking at their Q4 guidance. We're going to be looking at a few analysts' stock analysis on this as well. And then we're going to finish it off with looking at the deals with Walmart and Apple. And then at the very end, we're going to be doing a little bit of technical analysis. And that'll bring us to the end of the video. If you do enjoy, consider subscribing, and if you did find this helpful, do leave a like and comment what you think about AFFIRM Holdings. It is free and it does help me out a ton. If not, thanks for watching anyway. On to the video. So the first thing we're going to be looking at is the upcoming commerce opportunity that they have. So the first thing that they've highlighted is that they have a very large market with explosive growth. They have a more than $600 billion US sales e-commerce in 2019. On top of that, they have a $5.4 trillion market in retail commerce in 2019 in the US alone. Out of close to 50% of US commerce was impacted by digital touchpoints, which brings in a close to $2.7 trillion market that they're looking to tap into there as well. On top of that consumer preferences have been changing in the US population. More than 230 million are considered Gen Z or Gen Z, Gen X, or millennials, out of which 70% of them actually prefer e-commerce rather than in-store, and that's a very big consumer base that AFFIRM is trying to tap into there as well. So the first thing that they're looking to highlight is the problems with the current system, and they've broken this into consumers and merchants. So the problems for consumers is that there's a very high deferred credit card interest, more than 120 billion plus there as well, and more than $15 billion in late fees and overdraft fees, which makes it very restrictive and difficult to use with a lot of complex systems, and that's not very good for consumers there as well. For merchants, it means that they're spending more than $1 trillion on customer acquisition and more than $115 billion in processing fees, which leads to a low return on investment and doesn't give them a lot of control and is quite outdated technology there as well. So their solution for consumers means that they have a very flexible payment options, no late fees or hidden charges, and are very transparent and easy to use. For merchants, it allows them to have data insights. It allows them to have access to greater sales, which makes it better for both consumers and merchants there. And later in the video, we're going to be talking about how Walmart, Apple, Amazon can benefit from all of these benefits and how this will play a massive part in the growth into the future as well. So some of the Q4 business highlights that we're going to be looking at, we saw their gross merchandise volume increase from 1,203 million to 2,484 million between the financial year of Q4 of 2020 and Q4 of 2021, which is 106% growth, but goes up to 178% if you don't include Peloton growth there as well. Their active consumers have gone up 97% from 3,600,000 to 7,100,000 there as well. And their transactions per active consumer has also gone up, with the average transaction previously being 2.1 transactions, and this has gone up to 2.3 transactions, which is an 8% growth there as well. The active merchants have gone from 3,100 merchants in 2019. It had an 84% growth with 5,700 merchants in 2020, but this has jumped to 412% growth to 29,000 active merchants as of June 30th, 2021, which is showing how fast this company is growing. On top of that, their revenue has had a pretty significant increase. They've gone from 153 million to 262 million over the last year, which is a 71% growth. However, as a percentage of the gross merchandise volume, this has decreased and isn't too good for the company, but we're going to be looking at their investments later on in the video as well. So the next part of this video, we're going to be looking at stock analysis, basically from an analyst on Seeking Alpha, and they're going to be outlining the bull case of what is AFFIRM's competitive advantage and what makes them believe that AFFIRM has the potential to succeed in the future. So what they write is AFFIRM has a very, very good understanding of consumer behavior at checkout, and this is important because one of the benefits of buy now, pay later is the ability to increase sales for merchants, which requires a good knowledge of the consumer. Below are some of the ways that they use to understanding the consumer drive value. They have proven increased spending of 2.2 thousand average annual spend by repeat consumers. They have a 64% transactions driven by repeat users in financial year of 2020, and about 20% repeat at the same retailer within the 12 months, which means that they have proven that they can increase consumer spending. They have a very high repeat rate, and they have pretty good brand loyalty there as well, which makes it a very good partnership to make this deal with consumers as well. So building on the earlier point, due to their data and underwriting experience, they understand the consumer and their tractions for their 10K investor reports. They claim to have a lot of consumer insights and key informations about product types for consumers, and they've built the data analytics and informations about knowing how consumers react and how they might manage certain products as well. On top of that, they have quite good convenience and flexibility. Most consumers would prefer to have only one or two max of their buy now, pay later provider when they go shopping, and no one wants multiple buy now, pay later solutions at checkout. So this has been one of the reasons why Amazon chose to do partnership with AFFIRM, because it has a quite large number of consumer and merchant reach as well. They also have quite efficient cart checkout and conversion rates as well. So one of AFFIRM's competitive advantages has been their ability to increase AOVs and drive improved sales conversions for merchant businesses. AFFIRM has a lot of data and analytics on consumers and their purchase patterns, especially at checkout. Below are some of the key features that have been released in recent years to further improve checkout, as well as improve the breadth of merchants and consumers when they reach cart checkout point. So they have an integrated checkout, which allows them to pay over time with 0% interest or interest-bearing loans. They have a virtual card, they have split pay, they have marketplace and savings as well. So an example of the efficiency is a result of AFFIRM powering Shopify ShopPay. So Shopify, the observation from Shopify was that AFFIRM had the highest converting checkout rate amongst the major buy now, pay later fintech companies. 1 in 4 merchants using ShopPay during its early access saw 50% higher average order volume compared to the other providers. Merchants saw 28% fewer abandoned carts through ShopPay installments after switching from third-party buy now, pay later solution to AFFIRM. And lastly, merchants had 85% higher merchant AOVs compared to other payment methods when analyzing buy now, pay later solutions, according to AFFIRM's investor relations page. The industry experts have also confirmed that AFFIRM's checkout rate has quite high successes. For Amazon, AFFIRM's feature and payment tech is an added feature that will help them improve their sales. And some of the metrics show that 2 times the average number of transactions per consumer within the 12 months has gone up to 10 times the average number of transactions per repeat customer on low AOV products within the first 12 months. And AFFIRM has a very good consumer discovery and overall benefits the merchants quite a lot there as well. So one of the key competitive advantages of AFFIRM is the design and the vast data that they have of the checkout experience. They're very, very good at managing customer problems, and they have had an acquisition of Returnly, which increases the convenience and the ease of sales for consumers there as well. The third one is that they have a brand and consumer cognitive referent on AFFIRM. So the cognitive referent basically means that when you're referred as a brand power that a company has, this is what Airbnb owns in travel, Uber in transportation, DocuSign owns in e-signature. So with the buy now, pay later space within North America, AFFIRM is currently leading the first cognitive referent that emerges for consumers when you mention about buy now, pay later. So basically means that when you think of buy now, pay later, majority of companies think of AFFIRM. They do have some quite major competitors as well, including Afterpay and PayPal. But currently, specifically in the buy now, pay later phase, AFFIRM is leading this kind of cognitive referent. This is an underrated moat and a bargaining power for AFFIRM when it creates deals with merchants or companies like Amazon or Apple. So brand power and trust is a huge aspect of the buy now, pay later sector, because when consumers arrive at the checkout, it is important that they will trust the company with their credit information, as well as trust that the company will not charge hidden fees on their payments. On top of that, AFFIRM has a very, very strong millennial connection. And as mentioned previously, millennials, Gen Z, Gen X combined make up more than 230 million of America's population, and this is set to grow in the future as well. They're one of the most cost-effective buy now, pay later products compared to Klarna and Afterpay, which are some of their competitors. And they have a massive opportunity within this audience. And one of the reasons Amazon probably had a deal with AFFIRM is that Amazon does not have a very strong recognition, especially with the youngest generations that are kind of growing up and will kind of be the future of marketing. And AFFIRM has a very, very strong connection, which let them settle a deal with Amazon as well, which is more than 160 million in population and more than $2.5 trillion in spending. More than 50% of their consumers are already millennial or Gen Z. 81% of millennials would consider purchasing financial products from a tech company, and more than close to 80% of millennials regularly shop online using a smartphone. They have a very solid NPS of 78, which is greater than Amazon, which is why Amazon would see it as a benefit to have a partnership with AFFIRM as well. They do have current existing merchant networks and partnerships with Walmart and Shopify. We'll be looking at that later as well. They have a very high merchant partnership on their network, and although Afterpay has made some significant strides in taking market share, AFFIRM still owns some of the high-end and most expensive brands in North America. These are companies like NutriBullet, Dyson, Gucci, and other really, really large companies. They also have buy now, pay later programs with Walmart, Shopify, and Peloton as well. Looking at the Shopify partnership, ShopPay was installed, and Shopify has been growing massively in recent quarters. ShopPay was installed for more than 1 million merchants, and based on Shopify's past earnings calls, ShopPay will be rolled out to more than 118 million consumers as well. This is talking about Apple Canada as well, but we'll just go down and we'll be talking about the valuations and financials. So the next thing is revenue growth. So below the most recent financial results from Q1 to Q4 in 2021, AFFIRM's revenue growth has slowed down recently, especially coming out of COVID, but this deal could drastically change things for the company. Before the recent price move, AFFIRM was trading at an EVS of more than 35, but in the meantime, there are future revenue estimates below for the recent announcement. So in June of 2021, they're looking at a 63% year growth, and this is slowly expected to peter out over the next 5 or 6 years. And by June of 2027, they're probably looking at close to 20 to 25% year-over-year growth as well, after specifically growing their revenue estimate from over 800 million to almost 3.5 billion by 2027. Their forward price to sales is also set to decrease from more than 20 now to about 5 by 2027, which shows that the company will slow down its growth in the future. But when you have a company that has a revenue about 3.5 billion every year, especially in the fiscal period, and they have a deal with a lot of companies, it is okay even with a 20% year-over-year growth. It's pretty solid and looks like a pretty good investment there as well. So if AFFIRM could continue to capture 3% of the 2020 gross merchandise volume for Amazon and 1% of Shopify's merchants, we could see an additional gross merchandise volume of close to 9 to 10 billion added to AFFIRM's currently 8 billion in 2021 gross merchandise volume. This could imply growth of more than 100%, which means more than $2.5 billion in growth as of financial year of 2023. Even a 1% penetration for AFFIRM would mean a more than 47% upward revision in 2022, approaching almost $1.9 or $2 billion there as well. Looking at their next earnings and guidance, some of the catalysts that they have is back to school parents. More than 50% of parents are interested in using a buy now, pay later or a pay over time solution for back to school shopping, and close to 40% of them are interested in using a pay over time solution because it helps them stay within budget, which is basically the market share that AFFIRM is trying to grab a hold of. Secondly, that they've also expanded their ShopPay installments across the US for Shopify, and this could impact their revenue streams and profit streams gradually now and in the next quarter as well. And lastly is the impact of how Amazon and Apple in Canada will specifically drive future growth for the company, and it will be interesting to see whether the revenue guidance for the next fiscal year will continue to grow. However, there are some risk factors to monitor when looking at AFFIRM. Competition and market share in North America is very, very tense. AFFIRM was losing market share by 2019 when Afterpay entered the US market. Klarna and Afterpay entered the US market and have taken share from 80% in 2019 to 16% in early 2021, and as a result, growth has slowed down dramatically, especially showing from their recent results from 100% to 65%. This deal could help manage the dent, but Klarna and Afterpay are still very, very strong competitors within the United States. Square and Afterpay have built an alliance, and Klarna is the European leader in buy now, pay later, and large banks like Citi and Chase are gradually interested in the fintech space and are becoming more and more active in this market, and they have had quite a lot of they do pose quite a lot of threat, and there are quite a lot of competitors in Afterpay. We're looking here that AFFIRM had close to 78% of market share there and owns about 16% here, while Afterpay and Perpay and Klarna still take massive portions of this as well. The last thing we're going to be looking at is just some of the deals that they have. So Target has teamed up with AFFIRM. AFFIRM's share price has surged more than 20% on news that the media retailer Target is integrating a buy now, pay later checkout for purchases of over $100. And they talked about how it will benefit their company as well. They also have a deal with Amazon. So Amazon customers will soon have another payment options. AFFIRM said that Amazon customers will be able to use its services on purchases of $50 or more, including items like furniture, home goods, electronics, and fashions, and be able to pay this off in monthly installments. They do have a deal with Apple as well. This is from Reuters. So Apple Inc. and AFFIRM Holdings PayBright are launching a buy now, pay later program for Apple device purchases in Canada specifically, allowing people to pay for iPhones, Macs, and iPads over 12 to 24 months. In the United States, Australia, and Europe, buy now, pay later is marketed as an alternative to credit cards, and the service has soared in popularity during the pandemic as consumers continue to seek other options to make purchases that are easier out of their wallets as well. They also have a deal with Walmart, if this loads. So Walmart does away with layaway, so they got rid of layaway before the 2021 holiday seasons, and the company has announced that it is using AFFIRM as a buy now, pay later services. The retailer partnered it with in 2019, and they have had a deal with AFFIRM there as well. On top of that, AFFIRM partners, this is from their AFFIRM investor relations page as well, that they have partners with Shopify to exclusively power ShopPay installments in the US. And this is basically talking about the benefits of AFFIRM. It's more transparent, it's more flexible, and how it is helping ShopPay get access to new customers and basically improving it for merchants there as well. The last thing we're going to be looking at is just a quick technical analysis about AFFIRM. There's not much to go off. We can see the stock has skyrocketed a lot in recent times. Just first thing out of the bat, I'm going to say here that for me currently, the stock is far too expensive. It's trading almost at least 2/3 higher than its 20-day simple moving average. And the simple moving average is highly skewed due to the fact that the stock price suddenly went up really, really quickly. I would put... it would be interesting to invest in the company close to $80 or $90. That would be my entry price. I wouldn't go further or any higher than $95 when investing in AFFIRM. So right now, I definitely wouldn't put this company as a buy. I do believe it has outpaced its growth in the future, and there are massive risks to be taking, especially with Afterpay and Klarna taking up huge market share in the US. However, if the stock does come down, and it does look like the stock will correct in the near future, I would be interested in either doing some options on the stock or adding to my portfolio if the stock comes any lower, because I do believe, especially we deal with Amazon, Apple, Shopify specifically, and Walmart, these 4 companies have the potential to make AFFIRM one of the leading buy now, pay later companies in the world, and especially with the $5 trillion US retail commerce market, and then on top of that, a larger, maybe 10 or 15 trillion global commerce market there as well. Wouldn't be surprised if AFFIRM does become a global name there as well. So this brings me to the end of the video. If you do enjoy, consider subscribing, and if you find this video useful, do like and comment what you think about AFFIRM. Do you think that it can become a global company? Do you think it is just far too overvalued right now? And just let me know your thoughts. If not, thanks for watching, and I'll see you in the next video. Bye.